Okay, the market's coming back into the green, almost there. So let's see if it actually does swing back into the green. 3.5 odd points lower is what we have on the Nifty. Why don't we take just 30 seconds to recap what's happening across the board. So Axis, ICICI really top of the list. Bajaj Finance 3.5 higher. HEG is up about 7.5%. Graphite is coming up 9%. Both these stocks have gotten smashed last many weeks now. Granules is up about 3.6%. Again, very large volumes. Radico is up about nearly 4%. There is Philips Carbon, which is up 5%. Rights India, Syndicate Bank, VIP Industries are some of the others which have got between 3 and 4% in gains. And then the volumes kind of taper off. So I think I've read out the big volume stocks right here in these 10 or 12 names that are listed out. So that's essentially what's happening in the broader space. On the gainer side, Godrej Consumer reported numbers. The stock is under pressure and it's reacting to a weak set. Net profits and revenues came in below expectations, but the big dampener was a mere 1% domestic volume growth. Vivek Gambhir, Managing Director, CEO of the company, is now with us. Mr. Gambhir, thanks for joining in. The street is disappointed with volume growth. What was the reason, sir? Other than the fact that there was, of course, a high base, but volume growth at 1%, disappointing.
I think the volume growth numbers for the quarter were a temporary blip, largely driven by the high base quarter. And I think our recommendation would be to take a look at this on a 2-year CAGR basis because the base quarter has a lot of noise driven by GST rate changes that impacted different players differently. So on a 2-year CAGR basis, the volume growth for the quarter was 10%. That is very consistent with the kind of strong volume growth we have delivered in Q1 and Q3. So for the 9 months, the volume growth is 10%, and our expectation would be is to maintain and improve and drive to double-digit volume growth in Q4 as well. Given the kind of innovations that we are launching and the work that the team is doing on the distribution front, we are very confident that you will see double-digit volume growth in Q4.
But what after Q4, Mr. Gambhir? Do you have visibility for a stronger volume growth in FY20 as well?
In FY20, the focus clearly will be on driving volume growth. Given the kind of innovations that we've recently launched, along with the new products that we are launching, our expectation would be is to also look towards double-digit volume growth in FY20 as well.
Okay. What about input costs? How are they faring? We've seen crude prices ease. Is there scope to improve margins?
In Q3, as you know, in the India business, we delivered a very healthy expansion in EBITDA margins. We did see some temporary blip in gross margins in Q3, driven by some increases in input costs and some rupee translation and devaluation impact. Now that the input costs, particularly crude, seem to be more benign, we do expect to be able to continue to drive profitable growth in Q4 and in FY20.
Okay. Mr. Gambhir, what about Africa? It seems as though the environment in Africa is, consistently showing in your numbers.
In the Africa portfolio, we saw 14% growth in INR terms in Q3. The potential for Africa continues to be very exciting. We also saw a 500 basis points improvement sequentially in EBITDA margins. So the business is in the right direction with all the right building blocks being put into place. Across Africa, West Africa has been doing very well. Kenya is recovering nicely. The US business also, which is part of the cluster, is doing quite well. We have seen some challenges in the South Africa business. Our hope is that the worst is over. So going forward, you should see a much stronger performance on both top line and bottom line from the Africa and the US cluster.
What are you doing to fix the volatility in the household insecticides business? There have been a bunch of factors leading to disruption in that particular business. How do you see things panning out?
Clearly, we have not been happy with our performance in household insecticides. And as the market leader, our role is to grow and expand the category. We have seen the impact of illegal and unsafe incense sticks in the market. Through the association, we are working with the government to try and take the necessary actions to stop the production and the marketing of these illegal and unsafe incense sticks. At the same time, we have now recently launched a Goodnight Neem Agarbatti. It's one of the first natural agarbattis, very efficacious in the market, to give consumers who want to use incense sticks a safe and a highly efficacious product. Along with that, we've launched a Goodnight Power Chip and a 50% liquid vaporizer machine with 50% higher power. A combination of all these innovations that we've launched with a stronger focus on driving category growth should enable us to get this category back on a stronger footing.
Mr. Gambhir, what about the Indonesia business? If you can provide some outlook there. Revenue growth was positive, but margins came under pressure. Commodity costs and other factors influence that. But what is the sustainable level of margin there?
For the Indonesia business, for the first 9 months of the year, sales growth has been 10% and a 12% growth in EBITDA. So the business has been performing very well and clearly outperforming the industry in a tough macroeconomic environment. Q4 should be much stronger for the Indonesia business, and our efforts will be to build on this and continue the growth momentum in fiscal year 20 as well.
Okay, sure. Mr. Gambhir, what proportion of your revenue in fact comes from products launched, say, in the last 3 years, and what's your target revenue from innovations which are made by this year?
Typically, about 30 to 40% of our growth every year comes from new products.
Okay, and what are your expectations from this Friday in the budget?
I think given the nature of the times, we expect populism to probably trump prudence at this stage. From an FMCG sector point of view, we see significant growth opportunities from the rural sector, given the low penetration rates of our categories in rural India. I expect that the big focus will be on addressing the stress in the agricultural sector and rural India. Agriculture generates 18% of GDP. But sustains over 600 million Indians. And so we do expect the government to take a lot of actions to try and alleviate some of the stress in the agriculture sector. Along with that, we do expect the government to take some steps to put more money in the hands of the middle class. All of these steps should augur well for the FMCG sector.
Mr. Gambhir, thanks very much. Good luck. Appreciate you joining in with that commentary. We take a very quick break. The Nifty, by the way, slipped back. It looked like it was coming back into the green, but we're down 12 points.